Gentlemen, welcome to another Palaview market research video. Today I'm going to be breaking down Occupy Wall Street and what the hell happened there, okay? It's pretty wild. A lot of things went down, and it's a reaction to a lot of things in a row, and a cultural trend and a moment in history that remains today. And okay, so just to break it down really specifically, protests in New York City started following the aftermath of two main things: the subprime mortgage crisis, okay, and the government bailouts that followed in response to that subprime mortgage crisis, okay? Basically, once it was clear that the bailouts were only going to be saving the institutions who were responsible for creating the subprime mortgage crisis, the Occupy Wall Street movement began. The movement formed really because there were two primary concerns: that our corporate America, that our corporations, private companies, public companies, right, were beginning to have too great of an influence on our democracy, and that was leading to increased economic inequality. So I'm going to walk you through all the mechanics behind all of these ideas, okay? So we're going to first talk about subprime mortgages, and we're going to go through the flow of how this happened. And, so we're just going to start as a home buyer. So I'm a home buyer. I have a low credit score and I need a house, right? So I'm going to go to the bank. And because I have a low credit score and I'm not really a trusted person to give a mortgage to, the bank will agree to give me a mortgage in exchange for it being higher interest. And a high interest loan can be anywhere, basically, I would say anything above 8 or 8.5%. Okay, but it can probably range up to 12.5, maybe even 15% in these instances. Okay, I'm a home buyer. I want this orange house with an even more orange roof and one tree. I go to the bank and I say, hey, give me a mortgage so I can buy this thing. Because ultimately, when you buy a house with a mortgage, you are essentially entering into like a joint venture with the bank as a private individual to buy the house. You are now business partners with the bank, which is why when people talk about um, the housing crises and that like housing is due for a correction in America, they're completely wrong because banks are in joint venture with customers, right? With homeowners to hold those values. So unless banks go down, housing prices don't go down. And we'll talk about how real estate and banks are inextricably tied in another video. So let's continue this flow. So once a mortgage bank sells a mortgage and enters into an agreement and basically gets this house, right? It will then sell those loans to an investment bank, okay? The investment bank will then package up and buy a bunch of these different loans, okay? And will like essentially what are they will what's the word? They'll tranche them. They'll collateralize them and they'll put it into a big pool of other mortgages, right? So they sell these packages of mortgages, what are they called tranches, okay? Then they build them up and they package up all these mortgages and then they go and they sell them to the financial markets, right? To private investors, to hedge funds, to all sorts of different organizations all over the world, okay? Now, this process is all propped up by commercial banks, rating agencies, and insurance companies. Okay. The commercial banks give loans to the investment banks to go and buy these mortgages, right? So that's how the commercial banks are helping the investment banks. Okay. Rating agencies will rate the tranches, the packages of mortgages, right? And depending on the rating, they will have a greater appeal to the financial market, right? And then the insurance companies will insure the tranches, right? So they'll provide insurance on the tranches for the the buyers to feel more comfortable, right? So people really a lot of the time blame the mortgage banks for doing all this, but really the mortgage banks wouldn't be so motivated to sell subprime mortgages if they didn't have a buyer in the form of the investment bank. So if you're going to be upset with anybody, you should be upset with the investment banks and definitely the rating agencies, okay? Because the rating agencies were essentially bought out by the investment banks to essentially lie about the quality of these tranches. And these tranches, again, are just like hundreds or thousands of these subprime mortgages clustered into one investment vehicle. Okay, so let's talk about what happened as a result of this whole scheme falling apart. Well, we had massive unemployment issues here in America, right? So, as you can see in this purple little area here, this represents the number of civilians unemployed for 27 weeks and or more, right? So, this is a huge amount of the country, right? You can see here in this map, this is like basically what the stock market looked like for the entire world because of the America's housing crisis, right? Because everything is downstream of America, which means everything is downstream of banking and real estate prices in America, which remains true to this day. Housing prices fell 31.8%. Unemployment was sat at around 9% for a pretty disturbingly long time. And then all of these bailouts started to happen. Quantitative easing, right? So $144.5 billion moved from money markets into treasury bonds, and the Treasury Department spent $439.6 billion buying banks and car stocks and things like that to help the American economy survive, right? But where did that money go? Where does that, when you engage in that process of the government buying stocks and things like that, where does money go? Well, another way to talk about this is quantitative easing, or how I like to call it, socialism for the rich, right? Because if you're buying securities on the open market, okay, who owns those securities? Only rich people, right? So if, and when the government buys the security, then the value of it goes up. So this quantitative easing is this process here where a central bank prints money out of thin air. They go buy bonds, securities from financial institutions, public, private, all alike. They that leads to theoretically leads to, by the way, reduction in interest rates, and that leads to businesses and people to borrow more from the banks, right? And then that creates more like more economic stimulation for the banks, right? Because more people are borrowing money from the banks. And in this instance, they absolutely have to borrow from the banks in order to keep their, businesses afloat or to start new businesses because their businesses failed as a result of all this, right? So then the idea is that if you give people more loans at lower interest rates, then they will spend more money and create jobs, and that will therefore boost the economy. But this really is, you know, it's like in the short term, in short to medium term, it really helps out wealthy people who own the securities that the government is purchasing, and we'll talk about in detail to the degree to which they're buying those securities. And then over a very long period, it theoretically helps, the people downstream, the people who are accepting those loans. Now, this is Ben Bernanke. He's the guy who executed all this for the Federal Reserve. Now, there are 3 rounds of quantitative easing. It started in November 2008. The first round is when the Fed purchased $1.25 trillion worth of mortgage backed securities from the investment banks who did all of this, right? So, this is essentially why Occupy Wall Street happened because of the previous slides, and then it resulting to this moment where they caused massive inflation, right? They inflated the economy, the dollar, so that they can go ahead, purchase securities, which only brought economic value to the people who own those securities, right? Now, they then bought $200 billion in agency debt, $300 billion in long term treasury securities to help build the Federal Reserve's balance sheet. Then in QE2, they did another round where they bought $600 billion in treasury securities. And then the really disgusting one is in QE3, to like freaking 4 years after 2008, they started buying $40 billion in mortgage-backed securities per month, guys. This is what really got people pissed off because this is more money printing. This is more predictive, right? So it's like imagine you have like you're running this one of these investment banks, right? And you are looking to have like, you want business, you want a business partner, right? You want some and who do you what are the qualities of a business partner that you want? It's someone who's going to show up every month and buy things from you, right? So the literal American government was being that customer for the investment banks who were executing these subprime mortgages, right? So let's step back and talk about what quantitative easing is actually undermining in our society. Now, a lot of you are obviously aware of micro and macro as concepts, right? So, on the micro side of things, it's like what you and your family talk about at dinner. It's like the values that you guys want, have and the dreams that you guys have and where you guys want to spend your money and donate your money and like how you guys want to spend your time in the world. It's like your vision, it's like the causes you care about, right? And then the macro is like the realization, right? The realization of those things that you talk about at those dinners, right? It's the social developments, the technological developments, blah, 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 right? But in the middle is the meso level. This is how the micro becomes the macro, right? It's all the systems in between, right? It's the banks, it's the government agencies, it's the strategic partners, distribution channels, the people who literally create supply and demand, and the markets and the institutions that exchange value, right? So that demand, so that supply and demand can even be discovered or realized. So let's look at this chart here. So this is basically showing the narrowness and broadness of the meso level. So narrow is more privatized, broader is more corporatized, right? And then the thinness or thickness of the macro, right? So in 2007, our basically America, it was more closely to a democratic market economy and democratized society. So but it was leaning towards more of a democratic market economy. So I put this 2007 here to show where America was on this um, chart thing at that time. But after quantitative easing and all these things, in 2011, we became what is called a corporate democracy. Okay. And that is why Occupy Wall Street happened, is because our entire democracy began to be run by who can afford to buy and lobby politicians to do what they want to do. Before we had decent checks and balances between government and businesses, right? Now there is no difference. There are no lines to be seen. It's all just a swamp, right? The corporate we are somewhat in a corporatocracy, right? Corporatocracy kind of combined but with a gentrocracy, which is essentially a society run by old people. So what, right? Why am I talking about this? It's because one of the core values at Palaview is to help you guys understand why all of these decentralized applications are being built in the first place. What are they being built in a reaction to? And it's essentially a reaction to some of the problems that we inherently are as human beings, right? So like power corrupts, and so we have to avoid having these centralized institutions, especially when it comes to institutions of our society that are so important, like capital, money, investing, all of these things, right? Especially when it comes to how we store value through time, which is what Bitcoin is trying to solve. Because up until this point, our stores of value have been governed, and in monetary policy itself, which is essentially the governance of stores of value, right, has been driven by centralized institutions. Okay. Our hope is that with these blockchain based technologies and innovation in that sector, we can decentralize power a little bit more than it was before, so that we can avoid making the same mistakes in the past by overcoming what makes us human, right? Because the things that make us human are the things like I just said, right? It's like absolute power corrupts absolutely, right? So we want to avoid instances where people have absolute power, and blockchains make that a little bit better. So let's build, and that's today's video. Peace and victory, boys. Peace and victory. Let's go.